So why do we look at the calendar? We look at the calendar as that provides opportunities for high conviction trades. So this latest one we were looking at on the 6th of August was the RBA interest rate decision. Now we prepared fully for this event, and in order to find an opportunity, we wanted to see this example. I won't go into all the context, but essentially the recent inflation data print for Australia had resulted in markets beginning to think, oh, perhaps the RBA won't need to have such an aggressive hawkish stance as they have had. Perhaps they'll change their view and start to see the prospect of interest rate cuts coming. In fact, short-term interest rate markets saw 2 full rate cuts this year. So what we wanted to see an opportunity where the RBA expressed they're still concerned about inflation and they push back against the market pricing for two full rate cuts this year. And that's exactly what we saw. We were looking for them to keep this line in the statement that they're not ruling anything in or out, and that they stressed inflation risks and push back against stern market expectations of nearly 2 rate cuts this year. And Governor Bullock did all 3 of these things. So first of all, look, they stressed inflation risks and they kept that line in the report that they are remaining vigilant to upside risks to inflation and not ruling anything in or out. Hawkish. And they stressed as well that the board considers that the market pricing for rate cuts is wrong, and they said in this part of the release statement was saying that they did consider rising rates and cuts are not on the near-term agenda, and market pricing is too soon for cuts, right? So everything we've got. And then we got clear Aussie New Zealand dollar buy bias. Out of the event, you can see here, just drop down to the 5-minute chart. You can see a nice clear from the decision, clear buying for a good couple of hours. There's a pullback now, and in this pullback opportunity for today, we've highlighted another opportunity that if price moves back to 109.20, then that's a buy opportunity. So there's more to it than that. We did discuss it in the London and New York webinar, but that's why we look at these high probability trade opportunities. And of course, we've got another one coming up with New Zealand labour data, but that will be for the next cheat sheet. That's why we look at these calendar events to highlight clear, unequivocal opportunities as they present themselves. So what really matters on the calendar this week? Now, I've finally highlighted here the top 3 events. There are other events, but these are the top 3 that we've been looking for. First of all, the RBNZ interest rate meeting. Then we'll be looking at the UK CPI print and the US CPI print. And that is a wicked Wednesday because they're all occurring on the same day. And all of them are important for slightly different reasons. Now, if we just jump into some of the detail, of course, we will go into it in much more detail with the cheat sheet. But for now, with the RBNZ interest rate decision on Wednesday, inflation is moving in the right direction for the RBNZ, and the latest inflation print is showing slowing inflation. The inflation projections that we had out last week are showing a decent drop, and 2-year inflation expectation, which is widely watched, has now fallen down to 2%. So that's what the RBNZ expecting the target to be reached. And on top of that falling inflation, the quarter on quarter came in 0.4% versus 0.6% expected. That 3.3 was down from the 3.5 expected. So Q2 data tipped for the RBNZ. Consumer confidence is also dropping. PMIs are dropping. The majority of analysts are expecting the RBNZ to downgrade their GDP projections, their CPI projections, and the official cash rate projections are all expected to dip lower. Now, whether they go low enough or not will be the catalyst. And we're potentially looking at more Aussie New Zealand dollar upside with a bit of a divergence developing between the RBA and the RBNZ. RBA saying, meeting last week, we considered a rate hike. Inflation is persistent, the job's not done, and the market is pricing rate cuts erroneously. They're making a mistake. We are not seeing a recession on the horizon. Whereas the RBNZ, do they see a recession? Obviously, their growth has been slowing, so there are concerns there. So we could see a nice Aussie New Zealand dollar upside bias, and that could continue to push the Aussie New Zealand dollar pair higher. We'll be looking at that, getting it totally ready on the cheat sheet, exactly what to look for in terms of the RBNZ communication and their official cash rate projections, which come out on Wednesday. Business confidence, you can see in New Zealand, has picked higher, but that's because business leaders are anticipating coming interest rate cuts. So that, ironically, is a bit of a negative, the fact that business confidence is picked up, because business leaders are seeing interest rate cuts coming. US inflation, now this is crucial. We looked at this in some detail last week during the webinars, when what we've seen is that the break-even inflation expectations for 5 years have fallen down below 2%. So in other words, for the next from the present to the next 5 years, the market is expecting inflation to be at 2% on average for the US. So that's the target, right? That's great news. And that is why this recent rout in equities have found dip buyers, partly because the labour market was not as bad as people thought. The initial continuous jobless claims from the last week, fine. The US ISM services print PMI on the Monday, fine. There isn't a panic mode. And that non-farm payroll, although it was a little bit lower, the markets were expecting jobs are still being added and reassurance has come in. So the key thing to remember is inflation is crucial to that narrative, because if inflation starts pushing up higher again, then markets will worry that the Fed can't cut. Okay? So that is the sort of thing that could potentially result in significant downside in equity markets. If we see a struggling labour market and high inflation, that's the no-go area. That's the danger zone for equity markets. So this is well worth looking at. We want to see this continuing to drop. You can see the headline continuing to drop lower and the core continuing to drop lower. Don't forget, on our calendar, we have the high and the low expectations. So what we're looking for here is something that comes in above or below what analysts are expecting. That gives us a surprise. That gives us a tradable opportunity. That's a key data point for us to be looking at. Now, the UK inflation rate is also very important. Now, the Bank of England, we've been looking for opportunities to sell the pound, and the pound has sold off after its last interest rate meeting with a very, very split decision. But what we want to see now is a clear slowdown in either the UK GDP today, out this week rather, or the UK CPI print. If we see a big miss here coming in below market's expectations, then we could see a significant sell-off in the pound, and that could give us a little bit more upside. Potentially the euro pound, definitely one to look at. Inflation now at 2% for the headline, and the core is at 3.5, continuing to track lower. So that's what we're looking at. The top 3 events for this week. There are, of course, other events. So there are other data points for us to be looking for, but we're just focusing for now. These are the top 3 events I can see for next week. Don't forget, the cheat sheet will be updated, and I'll show exactly how to use our calendar with the high and the low forecasts so we can clearly see those surprise opportunities. Take care and have a good week.